This is Retirement News Online. I'm Scott Drake. With so much volatility in the stock market, investors saving for retirement must decide what investment approach may work best over the long term. Some market players question the wisdom of a buy and hold investment strategy, embracing active management instead. Here to talk about this is my guest, Jeremy Reif in Wausau, Wisconsin. Jeremy, welcome back. You know, it's been said that the benefits associated with buy and hold, which is something that folks like Warren Buffett like indexing, that includes lower fees, transparency, and tax efficiency. So what are your thoughts on that?
Yes, those are most commonly talked about benefits for a buy and hold strategy. However, you also need to be aware of the cons of a buy and hold strategy. It's all relevant to your time horizon, and if you have enough money, that this doesn't matter. Great example is many know Warren Buffett and that he has a lot of money. He can afford to do a buy and hold strategy, and he can weather the storm. Otherwise, for those of us that don't have assets like someone like Warren, we realistically need to have a long enough time horizon to make the money back in case of market decline. Taxes are only relevant if you have non-qualified money that's being looked at. Most people let the tax tail wag the dog, meaning they make moves based on the tax consequence, hence why studies show that so many people continue to underperform indices or markets. People are afraid to sell what they have to take profits because of the tax consequence. Thus, they avoid moving to a new investment that possibly could be doing a little bit better.
So, Jeremy, in the past, active management has been promoted because of its flexibility, risk management, and hedging opportunities. Talk about that.
This often gets confused with rebalancing funds or swapping one fund family for another within the same category. I'm not talking about rebalancing or fund swapping. I'm talking about true active management. An example of this would be if you own something, say it was real estate, and you knew that it was going to lose a lot of its value within the next 6 months. The real question is, would you continue to hold it? On the other hand, you also know that a category like silver and gold were going to go straight up for the next 6 months. Would you want to purchase it? We all know everything moves in cycles. A true money manager is watching for trends in broad categories to say we should be in something, in my example, like gold and silver, and be avoiding something such as real estate at the present time. Then as gold and silver runs out of steam, take profits, move on to the next category. By avoiding or reducing exposure to bad or falling categories, this can help mitigate risk. By being able to hone in on narrower categories or using inverse indexes or hedging strategies only adds more dynamics and diversity to the portfolio to hopefully improve upon the investment results.
So, Jeremy, both of these ideas seem to have their merits. How does the investor know which is best for them?
Unfortunately, most investors don't know the difference. And as I mentioned before, it's commonly mistaken with rebalancing or fund swapping. To figure out what's better really boils down to the time horizon, goals, and their personal situation.
Finally, Jeremy, since it seems like a good idea for the investor to get professional help, how do they find the right advisor?
The first question that should be asked is if their advisor is a fiduciary. To kind of define what a fiduciary is, it's someone who has to put their own clients' interests ahead of their own. The second part of finding someone is finding somebody that has credentials or who is in the industry and knows the industry. There are too many people who make career changes, are in the industry one day and gone the next. And then the last thing is finding an advisor who fits your personality. You want to work with someone that you like and trust.
Jeremy, thanks again. My guest has been Jeremy Reif in Wausau, Wisconsin, and you're watching Retirement News Online.